is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, HOOY is weekly. And I had a decision to make. Should I buy them since I sold them? Or should I just focus on HOOW? So, I made some decisions that I think are best for my dividend portfolio and turbocharging my dividend portfolio. And I'm going to just compare both of these, and I'm going to explain my rationales if I bought both after I sold HOOY for, the RoundHill WeeklyPay ETF, or if I sold the RoundHill WeeklyPay ETF for HOOY, or if I bought both. So I'm going to explain to you what I have done with this, and this was a huge call that YieldMax made. So we're going to start since inception. HOOY is 74.16. It's been up 38.41% since inception. Past year, it's been up 40.40%. Okay, that's great. Robinhood has done extremely well. I think Robinhood is actually the best platform out there. M1 Finance has become behind, as I told you before. I thought M1 Finance was one of the best, but it kind of fell off, and Robinhood took over. Year to date, again, 40.40%. Past 6 months, 40.40%. Past month, HOOY was up 74.1. I'm sorry, it was up a state football game, and it is listed at $5.34 being up. In the past 5 days, HOOY is down 6.73%, $5.35. In the past day, it's been down 8.09%, or $6.53. Plus, remember, it's weekly, so my thought process is, what if there's significant dips with the market and there's a distribution, and then there's another dip, and then there's a distribution versus monthly? Theoretically, and I did some calculations, it can be actually worse. And I'm not giving financial advice. It's just in a simulation that I looked at. And somebody wasn't happy with me, but guess what? We're going to look at HOOW next. Now, HOOW is new. It's up 45.18%. I own a lot of shares of HOOW. Again, brand new, so year to date, 45.40%. 6 months, again, 45.40%, which is good. In the past month, it's been up 11.01%. Past 5 days, it's been down 10.57%. Past day, again, 1.2 times the amount. It's down 10.20%. So let's do a comparison. Let's start from the get-go. HOOW has been up 45.18% since inception. HOOY was up 25.42% since inception. So I find that interesting. In the past 6 months, again, this was a little new, but look at how fast it jumped up NAV-wise. This is, again, the past 6 months. HOOW was up 45.40% to HOOY 40.40%. So HOOW was up 23.95 to 21.34. The past month, HOOW was up 11.01% to HOOY 7.76%. Now, HOOW in the past 5 days was down 9.64% to HOOY to 6.73%. In the past day, HOOW was down 10.43% to 8.09%. So now these are weekly distributions. Remember that. So this is going to be a lot more interesting for HOOY because it used to be a monthly distribution and now it's weekly. Now I sold HOOY for HOOW. I think long-term wise in receiving income that HOOW will be better than HOOY. And I did some crazy calculations with AI, and I just didn't like the way the trends were with HOOY. It could possibly drop way faster than HOOW. Now, HOOW, if Robinhood does well, HOOW jumps up 1.2 times the amount. And Robinhood is growing significantly. It is a very strong stock, and people are actively investing in Robinhood and buying shares of Robinhood and have a lot of confidence in Robinhood. I think in the future, Robinhood could actually be a dividend distributor because they've done so well. So I know that's long-term wise, but I think long-term wise, can I retire on either of these with passive income and rely on them? No. But can I use the income from HOOW to buy dividend growth stocks? Because that's my long-term goal, making thousands of dollars a month to buying dividend growers, such as Procter & Gamble, Visa, MasterCard, American Express. Yes, that's what the goal is. Lowe's, Home Depot, Starbucks, McDonald's, Coca-Cola, Pepsi, Iron Mountain with a REIT. That's what my goal is. And again, the recent announcement of HOOW was very exciting as well. Went big in HOOW, and the distribution announcement is $2.18. That is huge. That is huge. $2.18 for the announcement. So, and this is weekly. Now let's look at PLTY with a weekly distribution. I'm sorry, HOOY. So remember, this is a monthly distribution, 386. So you have a weekly distribution of $2. So think about that. The thing is with the synthetic call ETFs, okay, if there's a significant jump like HOOY, well, that's great. But HOOW is 1.2 times the amount, 120%. And if Robinhood's a really good grower, there you go. The NAV might be a little bit better, and the distribution might be a little bit better. So people like myself are selling HOOY and putting in HOOW. I think long-term wise, HOOW is a better investment. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. Please, you don't have to buy things because I buy things. I'm just showing you my passive income journey. Take care and have a good one. I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, can lose money, so be aware and do your due diligence. Go to a financial advisor for financial advice. Go to a tax advisor for tax advice. And again, you can lose a lot of money, so you have to do your due diligence. I myself do not believe in retiring in passive income with these WeeklyPay ETFs or YieldMax ETFs. I like dividend growth stocks, like passive income. Dividend growth, my philosophy is that dividend growth always wins, long-term wise. You guys take care and have a great Saturday. Go Bucks, be the Illini.